industry, we do stress testing for the various factors quarterly: liquidity, capital, even the strategy is supposed to be, we are supposed to do the stress testing on the strategy. And thanks to the Bank of Tanzania, they also issued that regulation. And come up with the solutions so that when the problems occur, what are we going to do? But again, it is important to align the whole team from the board level to the management level. What are we going to do when these crises occur? And to have the contingence planning. For example, we have in the banking industry disaster recovery sites, so that if anything goes wrong, then you can continue operations. But I can give you one example. During my tenure as the CEO, we had a discussion in the management. Should we go to the cloud? And it was not supported. Only the head of ICT and myself supported. But believe me, it helped a lot during the time of crisis. Because now we have these cyber attacks. And they once happened. I cannot mention among the banks I led which one. But actually that helped us a lot because we could continue with the operations. And coming to the evening, even other services were restored. Therefore, the preparations are very important. But again, when you have this economic crisis, as I've said, whether the problems are within the bank or to the customer or general economic situations, to have flexible payment options. This happened even during the COVID period. But the example I'm going to give you, it was not during the COVID time, because we have to look at these customers specifically. I remember we once made a decision where a specific customer who was facing serious business problem to restructure the loan for some years cost-free. Because then you rescue the customer. But again, when we talk about digital and remote services, these are very, very important to manage customers during the time of crisis. I can give you an example. In Zanzibar, at the People's Bank of Zanzibar, we had an issue with what we call the pension jamii. You know, the revolutionary government of Zanzibar is paying pension to all the elders, which is called the pension jamii. And these elders, sometimes they were missing their payments. But then when that issue was brought to the bank, and because we had a lot of agents in every part of Zanzibar, that helped a lot. But that helped at that time because we made that decision previously to have these remote services. Going quickly, I know the chair is still saying the time is up. Because we have also communication and the transparency to our customers, continuous monitoring and adaptation. Financial education is very important. At the time, for example, we are currently facing the dollar problem. But most of these customers, really, we need to sit down with them to educate them what is the problem and how are we going to help them. You know, there was a time, there was a confusion between the dollar for sale and the dollar liquidity. In a bank, you can have a lot of dollar from your customers, but they are not there for what? For sale. And some customers think, why don't we get these dollars? Therefore, education is very important at the time of crisis, but also collaboration with the government and NGOs. And the last item I want to mention is empathy and compassion to our customers. We really need to engage them, to have discussion with them on how we are going to solve their problem. And a lot of points here have also been mentioned about education, to have a focus group, but also we need to train our staff in these times of difficulties on how are they going to deal with the customers and educating these customers and solve their problems. Thank you very much.
Thank you very much, Dr. Masood. I think the main points here are customer-centric, institutional-centric, alignment of the strategy to the board, employees, and the issues of stress testing even to the strategy, and additionally financial education and collaboration, as well as customer empathy, which is also customer-centric in times of crisis. Let me now invite Dr. Gorgios Genimakis from IMF. He's online. Are you there? Can you hear us?
I'm here.
Is joining us from Dar es Salaam?
Yes, I'm here. Yes, I have joined. I can listen to you properly.
Okay. Based on your experience, are there any regulatory and supervisory approaches to be considered during financial and economic shocks for developing countries like Tanzania?
Okay, so if anybody else could mute, because I can hear like a lot of background noise, I would appreciate it. Thank you. Good morning also from my side. Can you hear me properly?
Yes, we can hear.
Yes. Okay, great. Good morning. Thank you, Dr. Zbai, for the interesting question. First of all, I would like to thank the Bank of Tanzania that invited me in this conference and congratulate you on the excellent setup. It's glad to see all the participants from all these diverse backgrounds that have joined in person in Arusha. Unfortunately, I couldn't join, so I'm joining remotely from Dar es Salaam, but still in Tanzania. My name is Georgios Denimakis, as you said, and I'm the Financial Sector Supervisor Advisor in the IMF Regional Technical Assistance Center in East Africa. We are based in Dar es Salaam. Just like very quickly, a few words for those who are not familiar with the concept of technical assistance centers. The IMF has like 11 regional centers, 5 of them they're in Africa. That we try to build like human and institutional capacity through technical assistance and trainings. So as I said, we have like 5 technical centers, regional centers in Africa. The oldest one is the one that I'm working in, the Africa East that I mentioned, that was established in 2002 in Dar es Salaam. We're serving at this moment like 8 countries, including like Tanzania in East Africa, and we cover like several areas from fiscal management, fiscal analysis, monetary aspects, FMIs, debt management, customs, tax administration, and of course, including financial sector supervision that I'm working in this area. In practice, like we provide like support to the regulators, not only to bank regulators, but also insurance and security markets regulators. And our aim is to enhance financial safety and of course have like financial stability in the institutions and the broader financing system. Going back to your very interesting question, I wish I could have like more time to elaborate more on this, but I will try to be quick. Of course, like regulatory and supervisory process during financial and economic shocks are very important. So there are very many foundation items that have to be developed. And as correctly mentioned also in the previous session from Dr. Musin Salim Masood, that we have to do a lot before going into a crisis. So indeed, there are like many items to be done. and these measures have to be related with, of course, and the foremost is like prudential regulation, legal frameworks, supervisory practices, stress testing that has been highlighted in all sessions so far, risk management frameworks like the ones that that has been brought up, and they give like information and guidance to the industry on how to mitigate and control risks, cooperation between authorities and other institutions, and of course, like focusing on regulatory adjustments and vulnerabilities, considering their own circumstances in all countries. I will highlight another point that was mentioned also like by Professor Volz, that cooperation among macro-prudential and microprudential is important. So it cannot be always like done in pure micro approaches. So we want like many people to interact. So we have like coordination between several authorities, monetary, fiscal authorities, market discipline, transparency, for consumer protection. All these concepts are very important in order to build confidence and foster market and institutional resilience. But if I had to highlight like a couple of points, I would focus on the regulatory frameworks and supervisory approaches firstly. But what do I mean by this? As we all know, the regulatory frameworks have undergone through significant changes over the last years, and this was the result and from the lessons learned from all the financial crises, the advancements in technology, the evolving standards. So we have like very notable changes in banking supervision, and BCBS is working on this one. New Basel standards with more stringent capital liquidity requirements. Also new regulations on IML, cybersecurity. We mentioned, it was mentioned in the previous session that we have like many cyber attacks. So we have like to build like resilience in this area, fintech, e-money, agency banking, all these things, they're bringing like a lot of work, a lot of homework to both the bank side, but also the regulators. Also, the pandemic has tested a lot our operational resilience and our strengths and weaknesses, and we need like constant efforts from all sides. In the previous very interesting session on climate risk, there is a lot to be done by the regulators, by the banks. Climate risk is across the board affecting like all risk areas. So many things to be done, and also IMF is providing like a lot of TA, technical assistance in order like to incorporate the climate related financial risks in the banks to enhance the supervisory processes, stress testing, of course. But keeping in pace with all these aspects and considering also the proportionality aspect, because many of these things, they have like to be translated in the context of the African countries, is a major challenge. But Basel III has done a lot of work on the macro aspects and addresses a lot of the economic cycles of the financial systems. We have like many buffers that came in place, like the systemic buffer, the counter-cyclical buffers. That is the responsibility of the stellar banks and the supervisory authorities to adjust them, and of course, like to increase or lower them in order like to release the buffer when there is like a downturn and absorb losses. But also supervisory approaches, risk-based supervision, like focusing again on key risks is very important. Again, something that has been also highlighted in the past, in the previous sessions, post-crisis regulation. It's very important to have like post-crisis regulations in place because we have like to be very proactive. And when we speak about post-crisis, we mean like in the banking sector, for example, how to resolve a problem bank and how to enhance banking loans and frameworks and resolution, crisis management, recovery plans assessments. But all these things, they have to be in place. Because they are also like very important to have like a resolution mechanism and also insurance schemes. But we should never forget that the foundation is a solid banking supervision that should be in place. What I mentioned earlier, risk management frameworks. It's very important that the supervisory authorities, they have like, they're issuing guidelines like the one that was mentioned about managing climate risks, how to manage, how to identify, measure, control, report, and mitigate all the risks that they may be relevant to the banks in order to have like sound practices. Stress testing. This is a very important tool that has been that is in the toolkit of both the supervisors, but also all the banks. We're using like stress testing on pre-crisis, but also during crisis, scrutinizing balance sheets. So the regulatory authorities are doing like their top-down stress testing, which is something on top of what has been mentioned earlier. So we know that the banks, they're doing their bottom-up stress testing, especially in the Pillar 2 documents. And I was glad to hear that the People's Bank of Zanzibar, they're doing that thing on a quarterly basis, which is a good thing under like severe but also plausible scenarios. But also, as I said, top-down stress testing, macro stress testing for all risk modules should be there from the regulators, and we need like cooperation between the supervisory authorities and the financial stability departments.
Please conclude.
But cooperation not just within the central bank and supervisory authorities. It's also important to have like cooperation with other authorities. With consolidated supervision is an important area. We know that in the past it was not that case so much relevant, but now we have like the internalization of many banks. So it's a basic principle of bank supervision that we examine the totality of banks' business work. So we are promoting cross-border supervision colleges within the countries under joint teams. It's very important to have like principles for exchange of information, aligned policies, memorandum of understanding. It's very good, but also benefiting and also like we're encouraging going also to international organizations like the IMF or the World Bank, fostering collaboration efforts between among themselves. This is very good, and take profit out of this one in order to stabilize and get like support and address any kind of risk, systemic risk that may be there.
Okay, we are running out of the time.
With all
Can you conclude with
measures play a pivotal role in safeguarding the stability. It's apparent that all these approaches during financial economic shocks should be in place, and the authorities should have a multifaceted strategy in order to achieve the target. There are things to be done. Many of them should be done before a crisis comes, of course. So it was good to hear like also about business continuity plans, operations resilience in the past. And we have like to be proactive, coordinated regulatory approaches to safeguard stability and promote our long-term economic growth.
Okay. Okay, thank you very much. We have heard about several aspects regarding this, including the human and technical capacity building you are providing, as well as issues of risk-based supervision and the cross-border supervision and the role of banks and regulators, and especially the issue of climate risk mitigation. And also you said, you stressed on the issue of stress testing. Oh, let's return to the room here. Thank you very much. Let me now ask Dr. options to manage and mitigate risk in the banking sector, and if you can share some insights from your experience. Thank you.
Thank you, Chair. I don't know if I can. Yeah. Okay, yeah, thank you. Now, let me start by thanking the Bank of Tanzania for this invitation, inviting me as a neighbor to come and join you on this conference, whose theme is apt for the times in which we are actually living in. Now, just going straight to the question that was put to me, I think when you're talking about regulatory compliance frameworks, this necessitates the establishment of a robust risk management practices that help banks, to identify, be able to analyze, report, and mitigate risks. Now, mitigation of risks in banking sector depends largely on the type of risk that you're talking about. And I think from Professor Ulrich's presentation, he analyzed the various risks that banks face. If you're talking about, for example, credit risk, you will basically, in terms of mitigating them, you just require a very well-structured credit information sharing mechanism that can then be used by the credit provider to be able to mitigate the risk. When you're talking about market risk, again, is an issue of diversifying their portfolios, balancing their portfolios to ensure that they are able to manage that pretty well. Operational risks, on the other hand, I think they come from such ventures like, for example, you've got cyber attacks on the digital platforms, and in order to mitigate this, you just require a robust monitoring system, and of course invest in the staff capacity to be able to manage and monitor the system to ensure that you seal any loopholes that may arise. When you're talking about liquidity risks, it's an issue of ensuring that you set minimum thresholds above which banks then should operate to ensure that they can be able to withstand any shocks that come into the market. Compliance and reputational risks, again, those ones are there to ensure that banks remain compliant to the regulations that have been stipulated or any requirements that have been put in by the regulatory framework to ensure that banks are always managing their risks on a distributed platform. Now, the current global trends, I think, have witnessed an adoption of emerging risk management techniques. And I'll not go into the details because this, I think Professor Ulrich in his presentation and even Dr. Masood mentioned about, and actually almost all the speakers have talked about stress testing. This is becoming almost like our bread and butter in the banking sector. We're talking about predictive analytics that now banks are beginning to use not only to be able to manage their, businesses more efficiently and more effectively, but also there is the issue of using the same techniques to be able to identify and mitigate potential risks that may infuse into their banking operations. Of course, one of the other issues that has been brought up clearly was the issue of climate risk. And I think climate risk is affecting us in ways that we have not been able to assess before. It's filtering into all the various risks that you have mentioned. It's filtering into credit risk, it's filtering into the liquidity risk, it's filtering into operational risks. And therefore, we need to be alive to the fact that it's changing the way we have been managing our risks. The question that comes to mind is, do developing economies have the capacity to currently measure and mitigate climate risk? I think Professor Ulrich mentioned about the initiatives that are currently going on under the Bank of International Settlement. I think those are initiatives that are coming in to support regulators to ensure that as these risks evolve, you are putting your systems in a way that you maintain stability by absorbing them into your risk management profile. Now, in Kenya, for example, the Central Bank of Kenya came up with a guidance on climate-related risk management guidance for the commercial banks in Kenya. This was in 2021, and banks were meant to put the frameworks into place to become effective 2023. One of the requirements there is disclosure to the central bank. Now, what we did as the association was to support member banks to be able to align themselves to being able to report to the central bank as per their guidance. Now, what we did, therefore, we formed a committee, and with the guidelines from the task force on climate-related financial disclosure, we were then able to put in place a template that is currently being used, and therefore helping banks to be able to be compliant to the requirements of the central bank. In fact, we launched this template during the climate week that was held in Nairobi last year. Now, recognizing the fact that the banking sector rates typically evolve, and with advancements in technology and in terms of the business models, the other players, including ourselves as associations, including the central bank, including the players, will also have to welcome new and innovative mechanisms of managing and mitigating these risks. We have talked about artificial intelligence, we have talked about machine learning. I think those are developments that are coming in, and banks are not any different from that. In order to be able to serve your customers more effectively and more efficiently and meet their needs, you have got to adapt onto these technologies. But they come with a risk, and you have to be cautious of the fact that the risks have got to be managed.
1 minute,
Thank you.
conclude?
Now, if I can just quickly go into giving some examples, and I think the example that I can give is in Kenya. During the COVID, we saw some regulatory, should I call it regulatory innovation? There were a number of measures that were taken by both on the fiscal side and the monetary policy side. On the fiscal side, of course, tax measures and expenditure by the government to try to allay some of the challenges that the populace was meeting. But I think let's look a little bit more on the monetary policy side. Inflation was the risk. Currency pressures were coming in, and therefore the natural response from the monetary policy side would have been to tighten. But what did central bank do? On the contrary, they actually loosened. The central bank rate was taken down. The cash reserve ratio was taken down, releasing liquidity into the market, essentially to support the market to be able to support the populace who needed some cash into their pockets. The other thing was IFRS 9. The measures that were taken by central bank was contrary to the expectation of IFRS 9, because they were effectively being allowed to, rather than impair the assets and therefore take provisions, they were actually being given some leeway to ride the customers through the pandemic, and then subsequently then be able to do that. So, for example, things like, for example, the repayment profiles, where banks were actually allowed to extend the repayment profiles of these customers to give them some breathing space to wade through the COVID-19 pandemic. So there were a number of innovative regulatory frameworks that were put in place to ensure that during challenging times we are also able to ride through. Chair, if you can just allow me to give just one example.
We are really out of time.
Just to illustrate a point.
Sure.
The fact that the regulation plays a significant role in terms of supporting innovation. And I'll give you an example. I'm picking the example of M-Pesa. M-Pesa came into operation in 2007. The regulatory framework that allows central bank to regulate a platform like M-Pesa was enacted in 2014. That was 7 years after M-Pesa came into operation. So for a whole 7 years, M-Pesa was operating without a proper regulatory framework. But that's a risk that the regulator took. And you can see the impact that M-Pesa has had, not only on the Kenyan economy, but regional economy for that matter. So I think there is a need sometimes for being innovative in terms of the regulatory approach to support innovation, even though we know that innovation sometimes introduces risks, which then you need to manage. I think I'll stop there, Chair.
Thank you very much. You talk about the issues of role of banking association for capacity building to support the regulatory compliance, as well as the new initiatives such as the artificial intelligence and machine learning and the deregulation. But you say that innovations sometimes are ahead of regulations. So let me invite Geoffrey, who will tell us about how best the banking industry can build the resilience and what are the challenges. Most welcome. You have 5 minutes.
Well, I thought you were saving some time for me. Thank you, Dr. Swai, for this opportunity. I think for me, before I talk how we can build resilience, allow me to borrow from the saying which says, you can't talk about the day if you didn't experience the night. And the night for us as a financial industry in this theme today is the 2008 financial crisis, the 2020 health pandemic, but also the recent and the ongoing heightened economic uncertainty which is going on globally. And this indeed requires us to set strategies which can help us to continue remaining resilient as a banking sector. And I think a lot have been said. Some of these strategies which I wanted to mention have either been mentioned in yesterday's session or earlier today by the various speakers. And I just want maybe to bring them home. But without further ado, because I know Professor has been very strict on time, the first one is on the risk management, which I think Dr. Jesus from IMF has spoken quite a lot. And I just want to add some few aspects of risk management which we need also to consider. So he talked about ensuring that we have a risk management framework, so I'll not repeat on that, but I just want to add the fact that we as banking sector, we need to use the various risk management tools in identifying, assessing, and monitoring the various key risks which we are facing. But important also that we come with strategies which will help us to integrate our framework with the sustainable banking, taking into account the environmental and social risks. Already there's quite a lot which has been mentioned about the stress testing, so I don't want to repeat or add anything there, apart from the fact that if we continue to do stress testing adequately, and I'm glad that Central Bank has already introduced this requirement since last year. So we are doing stress testing, not only on the Zanzibar part, but it's the whole of Tanzania, and this is on the quarterly basis. So that will help us to check our health check for various scenarios, very important. But it's important also for the banking sector to be conducting a scenario analysis so that we can evaluate and identify the various unique vulnerabilities which we are facing as financial institutions. But what we have not covered is risk appetite. So important for the players to define and communicate their risk appetite. But added to that, which is very, very important, we also need to define our risk culture. The world is evolving. We are seeing a lot of misconducts. So it's important, we as players, to make sure that we communicate clearly to our staff what is our risk culture. And this should be very proactive. Having said so, the second theme the strategies is on the regulatory oversight, which again, a lot has been mentioned, and I don't want to spend much time there, but I just want to highlight the few which have not been touched. And this includes the need for central bank to continue conducting the periodic bank examination, because through that, they'll be able to know what is the financial position and whether banks are complying to the very good regulations which are set to ensure that we remain resilient. Wow. I just wanted also to touch on the enhanced supervision. We understand the central bank has already identified the domestic systematic important banks. And in that, we need to see what is it that these 7 banks need to comply to ensure that there's no contagious effect when there is a shock in the market. We talked about resolution planning, so I'll not repeat that. AML and CFT, we talked about it. But consumer protection is also very, very important. I think Dr. Musin somehow spoke about that. Collaboration, very, very important between the key players. I also want to echo the discussion on capital adequacy, very, very important. And here again, central bank has established the ICAP requirement, and we're doing a parallel run, which is a good progress in the right direction. So important to look on the capital requirements, capital buffer, capital conversation. I think the IMF, doctor from IMF spoke about it. Capital planning, very, very important. Corporate governance as well is very, very important consideration when we are looking at the strategies to make sure that we have a good mix of the members of the board from the diverse sort of expertise, and that they have efficient and effective oversight. And the last point which I want, and maybe I will recoup some of this time in the follow-up question, Doctor, if you can allow me 1 more minute, is on the diversification. I think this one we have not talked about it. We as financial institutions, we need to consider diversification in all that we are doing. The loan portfolio, the asset class diversification, the product diversification, very, very important. Funding diversification, it's very, very important, but also who are our counterparties? Are we just facing 1 or 2 who, if they are into a particular challenge, we are also facing the challenge, but risk diversification is also very, very important. And last is on the wider collaboration with various stakeholders, including the Bankers Association. What is it that we are doing? Are we participating? Are we doing the research required for us to make sure that our industry continue to remain resilient? Let me stop there. Thank you.
Thank you very much. Let's clap for the team. Yeah, we are real out of time, but you mentioned a lot of good insights, issues of risk appetite and the risk culture, also diversification in funding and governance. Let me now invite questions from the floor. We'll start with those online. Can I have 2 questions online?
I have 3 from online, and allow me to ask them quickly, interest of time. Question 1 is Patrick Musa. With reference to the market analysis presented by Professor Esther Ishengoma on the varying interest rate pricing of loans, could the adoption of risk-adjusted interest rates pricing improve the level of financial inclusion by reducing those who are regular consumers while ensuring those who are excluded to seek inclusion? With reference to the market analysis presented by Professor Esther Ishengoma on the varying interest rate pricing of loans, could the adoption of risk-adjusted interest rate pricing improve the level of financial inclusions by rewarding those who are regular consumers while enticing those who are excluded to seek inclusion? And two other questions from online. Orbit Securities. How do you ensure financial stability where the key market segment, FX market, is facing rationing, meaning the failure of market forces? How do you ensure financial stability where the key market segment, which is the foreign market, is facing rationing, meaning the failure of market forces? And the final question from online, with a loan deposit ratio for key dominant banks in the country, how is the Bank of Tanzania preparing to mitigate potential liquidity crises in the unlikely event of external shock? With the loan deposit ratio for key dominant banks in the country, how is the Bank of Tanzania preparing to mitigate potential liquidity crisis in the unlikely event of external shock?
Shangoma, can you respond to the first question quickly? 1 minute.
Yes, on the issue of pricing or price differences when it comes to interest rates, here I think is where we are calling for maybe the analysis of more data, because as we have seen, there are differences. And let me say, because if you look at the provider, for example, the MNOs, let's say, let's ask ourselves, are the MNOs maybe still doing more investment in a way that they require returns to be able to cover those investments which they are doing? Looking at the interest rate being charged, how is it shared among the MNOs, maybe the fintech which are behind, and the banks? Because when it comes, for example, to failure of the borrowers to repay the loan, then how is the cost of failure being shared? Are the MNOs also taking the shares? Are the fintech taking the shares? Are the banks? Because what we understand at the end of the day, the bank might write you off, okay? But again, that will result in tomorrow hazard, yeah? The bank just being writing off. And when they write you off, it means it's the depositor's money that is being lost. Now, when it comes to the pricing, I think we have to look at it. And maybe as we move forward, we need to find a way where maybe we can reduce. I know there is kind of, I don't know, is it a secular or whatever, that the microfinance institutions might be required not to charge more than 4%. Now, that's where the required interest, the adjusted, is coming in. And then by charging that lower, might also increase the confidence of the people to continue borrowing, doing this. I mean, taking the digital loans, because you attract more people to take the loan. I think that can result into that. And again, I might end up by saying, let's also the borrower, because of high repayment rate we have seen, more than 95%, let's then also, I mean, share the dividend by charging them at least the lower rates.
Thank you, Professor. There was issue of loan to deposit ratio that it has been increasing. Can I ask Mr. Mchangila to respond on that? And Dr. Masudi will respond on the foreign exchange market failures.
Thanks. So on that question, I think it speaks about what I was actually trying to highlight on the strategies, that for any financial industry, then the regulator will try and establish the domestic systematic important banks, meaning the banks which, by any means, you have to make sure that they survive for the industry to continue to survive. So have we done so? Yes, our regulator have done so 2 years ago. They have identified 7 domestic systematic important bank. They're putting together a framework which will govern this. And I was also talking about the enhanced supervisory framework for this systematic domestic important bank. So that is very, very important, because regardless of whatever you're saying, as long as the enhanced supervision is done, then you are assured that the industry will continue to prevail. Just to add some other points into that, and on the liquidity side, so what is happening, the regulator has also come with some guidance on the liquidity coverage ratio. So we have some new mechanisms of making sure that beyond the deposits which you're saying on the GL ratio computation, then at any point in time, each and every bank is using the only required deposit to extend the loans. So with these very severe sort of ratios, they will help us to comply with the Basel requirements, which is very good for the industry. So I think going forward, yes, there has been an increasing trend when you look at the financials, but we should not be scared, because the guideline and framework is in place to protect the industry. Thank you.
Thank you. Dr. Masud, can you say something on the foreign exchange market forces?
Okay, thank you, Chair. I think it is a very difficult question, but I will try just to give some few sentences. I hope in this room there could be others who can answer this question better. Yeah, my answer to that is that we increase the exports and reduce imports. In the long run, then we will be saved. Thank you. But there could be some other elaborations from others.
Let me have Changila to add on that.
I think he's from Treasury background.
I have no.
Okay. Thanks, Chair. I think just to add it, first of all, this is not a unique challenge to us. Most of the emerging market countries are facing similar challenge. I think yesterday, during the first presentation, Cosmos Kimayo did actually highlight some of this sentiments. So one, it's not a unique issue for us here in Tanzania, but second, what is it that we are doing as an industry, as a country? So there are both monetary as well as fiscal measures which have been implemented to try and address the short, medium, and long-term sort of solutions. In the short-term end, I think we have seen a number of interventions, including the reforms which were announced by the Bank of Tanzania last year, but also there are other initiatives which are meant to improve on input substitution. You have heard about our focus in improving the agri sort of output. We are importing significantly on, say, edible oil, and now we have an initiative to make sure that we increase investment on that area. We are also increasing investment on irrigation, which will help us to increase our export from the agriculture, but also a number of other reforms, which if we have enough time, we could go one by one, but I just wanted to cement that, one, this is not a unique issue for us here in Tanzania, and two, the importance is for us to see what is it that we can do on short term, medium term, and long term, and those have been done. The industry has been engaged by the regulator. Various stakeholders engaging in various discussion to see how best we can address this issue. Thank you.
Thank you. He was clever to take my microphone. So let me invite comments from the floor, discussions.
Interest in time, we'll only be able to take 2 questions. We have one hand here and I think one hand there, and allow us to continue with the discussion and engagement of a tea break. Martin.
Thanks. My name is Martin Warioba from Warioba Venture. More question to the panel regarding the high interest rate. So I'm a big advocate for consumer protection, and I believe we should protect consumers, especially the underserved that we bring to the formal system. I also agree that financial institutions, both banks and non-banks, can do better with data analytics and segregate products for different customers. So I fully support the data analytics comment that has been issued. But my question goes to the wider stakeholders. Because we understand the high interest rates are there because of the risk that is in that process. And when we talk about de-risking the process, it's beyond financial institutions. So I'll give 2 or 3 examples that I think some of the areas that we also need to address, but I didn't hear that being mentioned, and maybe I would like to hear the panel observations on those. One is on the legal and regulatory framework. We know sometimes also the borrowers, as much as 95% repay, but the defaulters are there. And sometimes the law protects the defaulters. So when you default and you start collecting, they can quickly run to the courts, put injunctions. And that's probably one of the reasons why that high interest rate is there, because sometimes financial institutions want to accommodate for those defaulters or in advance. So how are we looking at that, and how can we address that in supporting, holistically, to support the whole financial sector? And I'm asking that question taking note that there are honorable parliamentarians in front of us. Second, how can we incentivize the credit scoring system that we have for those defaulters? Are we willing to blacklist them from credit bureaus so that financial institutions know they are only dealing with clean borrowers, and there is that incentives? The last part, it's also to add incentives to the wider sector. So for example, we've specifically put forward, we want to support the agriculture sector, MSME sectors. Can we provide incentives for financial institutions when they actually processing payments or including these people into the systems? They can be incentivized some of the cost. A good example, we all need to do KYC. And we know NIDA has to be sustainable. They charge a fee, and it's fair for them to charge a fee. But can we incentivize anybody, fintech, startup, bank, MNO, any program that is dealing with smallholder farmers, underserved communities, MSMEs? Maybe they get a waiver on NIDA fees. Maybe government subsidize for that KYC check. So you don't fail to serve the community, because there's also a lot of high costs in that pipeline. Thank you.
Thank you.
Final question from the audience, and then we'll take the rest of our tea break.
Good morning. My name is Julius Rimo from the Financial Intelligence Unit, Tanzania. My question is, how do banks balance in terms of the effort to increase earnings, to increase their profits and reaching their targets, and protecting the bank from taking illicit proceeds from many crimes, corruption, drugs, and whatnot, and also from being used by shadow economy, let's say being taking money from Hawala, which is operating underground, and passes through the bank and then to Hawalada, the agents. And this, you should take note that Tanzania, Kenya, and many sub-Saharan countries are in the gray list of FATF, which is Financial Action Task Force. And one of the items is that banks don't comply on MLCFT issues. Thank you very much.
Thank you. Moderator, over to you.
Thank you. Thank you very much. The last question I'll ask Changila to respond on that brief. And the other one, Professor Shengomo. It was about the issue of high risk vis-a-vis financial compliance on the incentivizing the credit scoring.
On the issue of credit scoring.
Can you put the mic closer to the mouth?
Okay. Yeah, we are talking about, you say, protection of the consumers, but at the same time, we have high risk, and we understand the digital loans, which I have just presented, most of them are not secured, and that's why the providers are making arguments that they have to charge high interest rate because the loans are not secured. But what I can say is that based on the experience, yeah, they are not secured, yes, but we have seen high repayment of the loan. Okay. And that is since we have made the analysis, and that is since, let's say, 2019. It's about 5 years analysis. And in some of the providers, they have even indicated it's 100% paid. So if it is 100% paid, could still we say we still continue to charge them very high interest rate? When I say very high, imagine someone borrowing the money, maybe it's just like an overdraft. Within, let's say, 6 hours, because we have these people who have been trying. You borrow 50,000, maybe at 7 in the morning, because you don't have access to, and you want to do something immediately. And at 12, you repay. But when you are repaying, you pay with 6,000, you know, you borrow 50, but then you pay the total amount of 56. So within 6 hours, you have paid 6,000 as including the cost, all the costs. So again, is that what we are calling fair pricing? And if they have been paying anyway, we have also other borrowers when we analyze those who are taking even bigger loans. You find they are paying, maybe the payment is about 90%. And you say these are risky clients because it's not secured, but the repayment is 100%. The repayment is 97%. And you charge them, if we convert that 14%, what I have shown, or 24%, that 24% is per month. Now multiply by 12, if it is per year. But the one who is repaying maybe 90% repayment, the interest rate per year is maybe 25% or 16 to 25. But this one who is repaying 97%, the interest rate is about 200%. So what is what? Should we still maybe put ourselves behind and say, these are very risky, but they are paying, yeah? Let's look on the modalities of looking at those data and say, let's moderate this. They are risky clients because they don't have collateral, but still they are paying. Let's look on how to advance on this. On the issue of incentives, yes, we have seen some of the incentives being paid. For example, bank guarantee, as we have seen. Those are some kind of incentives. If you are targeting these clients, sometimes you get access to the guarantee. We had yesterday the agricultural. They are accessing maybe the loan from the BOT at 3%, and they are going to lend at a given percent. Those are kinds of incentives being provided. So we can say they are being provided. Maybe we can look more. And what I'm saying, this, we have to do this, all of us. It's not just the role of the central bank. We have to work together as all the stakeholders to be able to find the solutions. Thanks.
Thank you. Changila, can you respond very brief on the balance of the profit and the target claims via shadow economy?
Thanks, Chair. I think you had given me another question, but anyway. So I think we very transparent, and there's a requirement for financial institution banks to be transparent to the wider public. So there's a requirement for us to publish our financials on quarterly basis. The financial have been audited, but also there's a supervisory and monitoring tools. And let's be honest with each other. So banks are investing to make sure that they also maximize return to their shareholders. But if we are doing so, then we are conscious of the consumer and customers who we are serving, and hence the consumer protection regulation, where we are disclosing all the aspects of the products which we are offering, including the fees and various charges which we are charging on the products. And this is actually published on the newspapers, so that all the consumers can see where they should go in terms of the best service. So I think that is a very wider discussion topic which requires a separate sort of session. But I just wanted to say that from the financial institution, there is a transparent way of communicating to all the stakeholders. Thanks.
Thank you very much. You will agree with me that this topic is highly loaded. We may need even a week or so to discuss all these aspects. And coming from the academic institution, I can promise anybody here that we are going to have, we are going to take from here and have a wider discussion from the academicians and across the players in the industry. Let me thank the keynote speakers, Professor Ulrich from London and Professor Esther Shingoma, also the panelists, Dr. Julius from IMF Dar es Salaam joining us online, Dr. Habil Olaka, Dr. Musa Masoud, and Mr. Godfrey Nchangila, and everybody in the room. Please let's clap our hands together as I announce this session closely or continuing in other networking discussions.
And we clap for them. Let's also clap for our moderator, Dr. Tobias. May I request you to please stand up and take 2 steps at the front and take a group picture, my photographers. As they take a group picture, quick announcement. May I request all the VIPs, as you walk out, you will use this door when we go for tea. Unfortunately, we've got to cut short on tea break. We have a participant who is a keynote from Palestine, and his time is limited. We were supposed to be at 11, so we've requested at least another 15 minutes. May I also request magavana na magavana, deputy governors wastaafu, speakers, moderators na keynote, wajana wote na waleo, wenye viti wa kamati za kudumu za bunge, PIC pamoja na budget. Naomba mkitoka tu kwenye huu mlango on the far left, kuna chumba pale, tunaomba tupite pale kwa ajili ya logistics, na tutaongozana na VIPs wengine ambapo huko tutaelekeza sehemu ya kwenda kunywa chai. Kwa sisi wengine wote naomba tuende Lake Nyasa kwa ajili ya chai, and please let's reconvene at the earliest possible. Saa 4:15, saa 5:15 naomba tuwe tumekwisha keti ukumbini tayari kwa kupata presentation. Nawashukuru sana. Nawatakia wote wakati mwema. Asante. speakers, moderators, keynote speakers from yesterday, today, and today, governors, deputy governors retired, wenye viti wa kamati za kudumu za bunge, PIC, and budget, pamoja na manaibu wenye viti wa kamati hizi za kudumu za bunge. Tunaomba tupitie mlango ule. The VIPs, let's use that door as we break for tea. Interest of time, naomba ukiinuka, please start moving. As you get up, let's start moving. Time is of great essence. Safi kabisa. Shukuru. Let's move, people. Za kudumu, PIC na budget. Naomba let's move to any direction, but please let's move. Naomba tutembee, naomba twende. Muda sio rafiki siku ya leo, being the last day. Naomba twende. DJ, naomba yale matangazo yale. Technical team, naomba zile video za matangazo.
our customers were able to send money to customers of other digital financial services providers through the use of tokens and secret codes. This required multiple integrations between our various platforms and our various ecosystems, creating an administrative burden of reconciliation, flow management, and also to fund these floats. The coming of TIP improved all of this by one, improving the customer experience, because customers now receive value in the wallet in any ecosystem, but also it's created one
You're looking for someone.
Yes. So the deputy governor is supposed to deliver
the closing remark. Okay. Deputy governor Someshenuka. Yes.
We don't have time.
We don't, yeah.
And there's no way we can cover everything.
That's a speech for him. Okay.
So let me try to deliver this to you.
So, all the best.
Yes. Ile mpaka si unayo. Nini mfano bosi?
Tulisema wanapitia mlango kuu wanaelekeza. Wanaenda secretariat room ni wale tu wanaenda kuchukua nini. Nasikia ati manani wote wameenda kutumia ile chai ya kule sasa ya huko imebaki. Kabakia profesa peke yake anakunywa chai peke yake anauza yake.
Kwani kule umeingia wangapi kwa sana? Wameingia meza kuu mbona wote bosi?
Wameingia.
Meza kuu tu ndio wameingia hapa.
Tuliwaambia kale kwa suluhisho badilisha na Pamela na wakati nikakwambia kabisa tumemwambia mpaka hostel. Baba watatumia ila mlango ndo atokee huu ili kusilete commotion kama jana. Yaani mpaka tunaonekana visho hiyo.
Hiyo ilibadilisha sana. Ambadilisha saa ngapi? Si ndio tulipokuwa tumeambia nusu? Alibadilisha.
Ameambia na Ashe. Kwa nini pale mpaka mchana na Ashe? Sio shida. Hata bonge kunywa huko sio.
Kwani si choni ipo au? I say nimesimamiwa hapa na bosi wangu ndugu yangu. Mdogo wako ni yule mkaka yuko slow. Naomba basi mwarakishe ndugu yangu. Unajua ni mafundi yako. Sio kampuni. Kwani? Walibadilisha tangazo. Labda profesa mzee yule. Good morning, dear. Very well, thank you. Karibu. Happy. Oh, sorry. Is it on? anamuuliza, is it possible to get the
yeah, tutaweza kupata.
I want you to take a photo.
Bro, nitakucheki ya samani, nitakucheki.
Wanazipataje? Umechukua contact? How is she going to get them?
Tutaweka kwenye nani kule kwenye port.
Kwenye
Kwenye port ya kofia.
Yule anapiga tayari. Konina.
Simu za kiganjani pamoja na mabenki na malipo haya ni zaidi ya shilingi za Tanzania trilioni 23 zilipitishwa kupitia mifumo hiyo ya malipo. Inaonyesha kuwa Tanzania tuna kulipa bidhaa na huduma kwa njia ya kidijitali. Tanzania inalenga kuhakikisha kila Mtanzania anaweza kutuma fedha na kufanya malipo kwa urahisi, haraka na popote. Machi 2024, Benki Kuu ya Tanzania inazindua rasmi mfumo wa malipo wa papo kwa papo ujulikanao kama Tanzania Instant Payment System TIPS. Tanzania Instant Payment System TIPS ni mfumo jumuishi unaowezesha mwingiliano na malipo ya papo kwa papo kati ya watoa huduma za kifedha nchini, mfano mabenki, kampuni za simu na watoa huduma wengine. Mfumo wa TIPS umeongeza ufanisi katika kufanya miamala mbalimbali ya kifedha, ikiwemo kupunguza gharama za uendeshaji kwa watoa huduma, kurahisisha usuluhishaji wa miamala kwa watoa huduma na kuongeza huduma nyingine za malipo ukiachilia huduma ya kutuma fedha. Kama Mtanzania unayefanya shughuli za kiuchumi, TIPS inarahisisha kutuma fedha, kurejesha miamala iliyokosewa, kufanya malipo papo kwa papo, kubaini na kuripoti utapeli, kuhakikisha taarifa za walipwaji ili kupunguza makosa, kufanya na kupokea malipo kwa kutumia jina mbadala lililosajiliwa. Hivyo, unatuma pesa kwa marafiki na familia, unafanya malipo ya huduma au bidhaa mbalimbali, unafanya malipo ya serikali au unatuma pesa kwenda mtandao mwingine au benki nyingine, TIPS inafanya kila muamala wako uwe wa haraka na salama. Benki Kuu ya Tanzania inafurahi kukuletea mfumo wa TIPS ili kukusaidia wewe na biashara yako kufanya miamala kwa uhakika zaidi.